Since you were all here on time, I'll welcome you very much to our first webinar of the year, Predictions for Sustainability in 2026. As always, it's insights from experts in 30 minutes. We'll keep it short and sharp. And I have got my colleagues, Nicole Sullivan, our Impact Director with me, and our Technical Director, Jeff Vickers. We will share with you what we're observing, or what we see coming in 2026. But we are also very keen to hear from you and take your questions as we go. So we really want to keep it very interactive. Put all your questions in the Q&A box, please, because we can then, if we don't get to all of them, can pick them up and can get back to you later on. You can also leave comments in the chat, and our colleague Emily, who's in the background here, will be sharing some additional resources and information that you can read up on some of the topics that we are mentioning as well. Looking forward to a really interactive session today, and to make it really interactive, we start off with a poll. We've done the housekeeping. You're all in listen only because we want to keep the audio quality up, but we do also want to keep it interactive, so please use the chat and Q&A boxes. Now, you'll hear a lot from us, but what I would like to do is to hear a little bit from you as well. So, what have you focused on in 2026? We'd be very interested to hear from what have you focused on in 2026? Was it circular economy, climate risk, extending sustainability into all parts of the business, to just keep doing what we do, or was it climate risk? Fairly even. I'll share the results in a moment, but I can say now I'm very, very interested to see that quite a few of you have focused on extending sustainability into all parts of the business. The first part of the poll is, what have you focused on in 2025? And now we also want to hear, what will you do in 2026? Okay, so a few answers still coming in. And the poll now, last chance. And we'll share the results. You should be able to see the results now. Climate risk, 47%. So most of you really focused in 2025 on climate risk, followed by extending it into all parts of the business. And congratulations to all of you. That is a really far-reaching view. That's really good. Circular economy, and then we'll just keep doing what we do. Fair enough. Last year was a tough year for a lot of companies. Now, next year, extending it into all parts of the business to set yourselves up for success. That's the vast majority. That's very encouraging. Thank you all for sharing. And I can see, Janet, you've got your hand up. Is there a question that I need to get to? If you have a question, please put it in the chat. Okay. I'll kick it off with a question to Nicole. Nicole, you have very often said to me last year, you are observing proof will matter more than promise. What do you mean by that specifically? It's a very, very broad prediction.
Yeah, it is broad. Look, we've seen a lot of ambition over the past few years, a lot of statements of good intentions, but I reckon we're now seeing a real turn where ambition is now pretty close to meaningless. That doesn't mean that we don't need to have ambition, but rather we need the proof behind it. So we need things like clear baselines so that we can know where we're starting from, and therefore if we're claiming reductions, what that's from. We need trustworthy data that's highly credible, that we know where it comes from and what it means. And we need not just a plan, but we actually need evidence of real action now. So not just we're planning things in the future and we have ambition, but we're doing things now. And we're also planning credible future actions where we know what we need to do and it's possible and reasonable. And also we have the funding to be able to do it. So in brief, That's a snapshot of what I mean. Jeff, you've been talking about
Oh,
building
let's play
momentum.
that. Jeff, I'll follow this over to you. You often say measurement is really important, building momentum through measurement, but it needs to be meaningful measurement. What do you mean by that?
I think we've probably all heard the saying that you can't manage what you don't measure. But I
Mm.
think the challenge that presents in the sustainability space is that people try to over measure. They measure everything, right? If you don't know where your focus is, if you don't know what matters to your stakeholders, you try to do a little bit too much, measure everything, report everything. And I think in the early days of sustainability reporting, you used to see that quite a lot, right? Very long sustainability reports that became like phone books where everyone was trying to measure and report on absolutely everything because they weren't sure what mattered most. I think where we really need to transition in the sort of second half of this decade is towards measuring the stuff that actually matters to your stakeholders and to you as a business. Measurement without purpose is meaningless. It's a waste of time, right? If you're not focused on what you're trying to achieve and what your stakeholders need from you, then why are you doing it? And I think there's a real risk in the kind of current environment that where there's AI, there's other software tools, there's all kinds of things enabling us to do more and more, faster and faster, that creates this kind of, never-ending kind of chase for more and more data, the pursuit of more and more just for the sake of it. And I don't think that helps, right? I think what we really need to do is to say, okay, what are our objectives? What are we trying to achieve? What do our stakeholders need with respect to sustainability? And how do we design a strategy to measure the things they actually care about and report on what they need to hear rather than just overwhelm people with data? So how do we move from that data to insight type perspective?
I think that's critical. It's also finding the right level of measurement, right? If it is 14,000.135 kilograms of CO2, is it really?
Yeah.
So there is that element as well. At the risk of moving to more measurement, one area that all of you have mentioned in the poll has been an area of focus and will be an area of focus is circular economy.
Mm.
That very much is sort of a catch-all phrase at the moment. What do you see there in terms of measurement?
Yeah, I think it's an interesting one because I think from a personal perspective, one area of concern I see with the circular economy is that it becomes quite hand-wavy. It's obviously a good thing. Everyone wants it. The circular economy is clearly good. But then when it comes to what are you actually doing? Oh, we recycle stuff, and it becomes quite kind of compartmentalized to the most obvious thing, which is kind of recycling, when in reality, the circular economy is so much more than that, right? And that's just kind of one small element of the overall picture. I think where we need to move to, and this is something that our colleague Jim Godden, our head of circular economy, also always talks about, is how do we move that more towards robust, repeatable measurement, something that we can do day in and day out, and then actually make meaningful comparisons. And his view, for this year is that we really need to move the measurement of circularity more towards how we're measuring carbon or even how we're measuring financial transactions, right? Where you've got better tools, better measurement methods, and also clearer guidelines. And so one of the techniques and tools that we use, or approaches that we use a lot internally, is called the Material Circularity Indicator, or MCI. It was created originally by the Ellen MacArthur Foundation in the UK, and it's a kind of publicly available methodology for how you measure circularity. It considers the input side, the raw materials you're using, the output side, what's happening at end of life, and also allows you to account for whether you're performing better than average in terms of utility. Are you extending lifespan and those kinds of things? And I think from the perspective of an organization like thinkstep-anz, measuring in a consistent and robust way is incredibly important to us and something we'd always advocate for.
Jeff, you've been talking a lot about how we've been doing lots of measurement and we need to be more focused. And I think one of the challenges that sustainability has had is we want to do everything. We feel that a lot of stuff matters. And honestly, a lot of stuff does matter, right? But I think sometimes actually getting that focus is really important, and being able to even just start small and do something and build a foundation and build over time. So like to start with, let's do a pilot on a specific product. Let's do a targeted project focusing on something, or let's sit back and say, okay, let's not just have a scattergun. Where actually do we need to focus? What's in the... And so really trying to do something, but not try to do everything. We all know, and like we've been watching the Winter Olympics, right? If you stand still on the ice or the snow, you're gonna slide backwards really fast, right? And I think that's true of sustainability as well. So we don't want to stand still, but there is a spectrum between standing still and backsliding. and trying to do everything all at once and then it becoming overwhelming. So I think we need to be smart about hitting that sweet spot in the middle.
Yeah. And kind of, oh, go, Barbara.
I was just going to add one of my observations, which I've started sort of seeing quite strongly second half of last year and now really moving forward, is that the leadership does need to come from the board on a strategic level.
Mm-hmm.
A lot of you have put in the poll, we want to expand sustainability into the whole business, basically have all of your employees being your sustainability team, but that can only happen if it comes right as a strategic decision. And that also doesn't mean you have to do everything at once. But what we've been observing, and I personally have been involved in quite a bit, is in actually training up boards and seeing what is the value, moving beyond risk mitigation to what is the business value that sustainability brings. And that really is in minimizing costs, not just in the materials, but also in staff turnover and having less risk to fines, all those sorts of things. Have adaptation strategies in place for climate risk. Yes, that is risk mitigation, but it also does deliver long-term business value. And that is really where I see a shift. I get more and more inquiries. In the past, we got inquiries from the sustainability manager saying, I want to do this, help me convince my CEO, help me convince the board. We now get inquiries from the CEO saying, my board told me I need to, how can I convince my teams to do? And that has flipped. And I see that flipping more and more.
There's a real evolution, I think, in terms of the way that we're thinking about sustainability. And it was kind of, has this spectre of risk around it, certainly, and we need to grapple with that. But just in this past year, I did a risk and opportunities assessment with a company for ISO 14001, and they were really shocked at the number of opportunities that came out of that for their business. It wasn't all about risk at all. It was actually opportunities for them to do new things, save money, amazing outcomes.
Yeah, and I think, we talk a lot internally about last year being kind of a year of uncertainty, right? There's a lot of geopolitical uncertainty. A lot of companies were not sure what they should do. A lot of decisions got delayed because people weren't sure how they should act. And I think that business value lens really does help to anchor you in what are you doing and are you doing it for the right reasons, right? Like if you're saying, okay, how does this help to mitigate risk? How does it help to create opportunity? How does it create overall business value? Then you're doing things in a way that is going to be sustainable as well. Like we need to make the sustainability activities sustainable because we need them to continue over the long term. If you're just doing them because they're the fashionable thing of the day, that doesn't necessarily set you up for long-term success. And one of the things that year of uncertainty in 2025 did is it's really helped to refocus and reprioritize, do these activities really matter for us as a business? And if they do, what value are they contributing? Which I think is a really healthy thing from a business perspective, right? Because it needs to link to business value in the end for it to really be maintained over the long term.
I've got a very short answer to that, or another observation really, is in New Zealand, the legislation has really lifted the or up the threshold quite a lot, and not a lot of businesses now have to do climate risk reporting anymore. What now happens is not that people go or businesses go, phew, don't have to do that anymore. But okay, we've done it. We do want to continue that in a pragmatic way. Don't have to do the compliance part. That's fine. That's a relief. But we can't stop because the risk is not going away. And we actually see real value. And also in what Nicole just mentioned, in those opportunities. As a fun fact, Nicole and I always have a bit of a discussion about this opportunities assessment. I call it a maturity curve. Nicole calls it an opportunity assessment, and I think that is the better term. But it really is about how do you progress next and what are your opportunities.
Yeah, and that's a fascinating process because people get to identify where they are now, but see what the trajectory is and then align that with their business strategy and with what they value as a business, because you can't do everything. That's called solving world peace. You can't do everything. So you pick it and you align it with your business strategy.
So what do you think could be the biggest risk then? Let's just pick a topic in terms of climate risk next year, Jeff. Do you have what's your thought on that?
I think there's always a risk of seeing that you're not needing to comply now and kicking the can down the road, right? So there's always a risk of not starting because something doesn't apply to you immediately, or we've got an exemption, or we're being phased in over time, or this doesn't apply for reasons, and then not using that as a reason not to do something. I think you can reframe that and look as an opportunity to do something different or smaller or get started, and without a kind of regulatory thing hanging over your head. And so, our advice to businesses would always be to start with something. And in the context of climate, if you are trying to assess, what your material risks are, there are really easy things you can do to kind of look at what matters most quite quickly. Even if you are just required to do scope 1 and 2 now, it's relatively simple. But if you're going to kind of scope 3 reporting as well, there's spend-based emission factors. There's things that allow you to kind of quantify what your business carbon footprint is. There's tools out there for looking at risk, and there's workshops and approaches you can use to kind of understand things through a business lens. And so I think a lot of that stuff, it doesn't have to be the biggest all singing all dancing version from the start, right? You can start with something small, work out what matters most, and then work out, how should we build a strategy around that that's going to endure over the long term? How can that set up for any future organization, future sort of compliance requirements we may have, whether that's legislation or whether that's customer requirements, and how can we set ourselves up for success over the long term? So to answer your question, Barbara, I think the biggest risk is always inaction. If you do nothing, then you're just kind of setting yourself up for failure, or you're setting yourself up to have a lot more to do in the future, at least.
That's been risk in a different direction, and that's probably kind of my bias a little bit. I think there's a big risk in the way that we communicate or don't communicate. I think when we think about how we communicate, it's very easy to even unintentionally mislead in the way that we communicate, or to intentionally not say anything because we're too scared of saying the wrong thing. And so where we need to be going, and where I'm seeing leaders going, is really clear, honest communication. So the way that people are approaching it is they're using plain English, so they're not using all this jargon that people might misunderstand or misinterpret. Talk about what you're doing. Talk about why that matters, and where there's still uncertainty or where things are still happening, just be honest about it. Because that way, there's no chance of misleading. And actually, I think that kind of approach really demonstrates that you're being a leader in not only what you're doing, but in helping the whole market understand where we need to go and the kind of actions that are needed. Barbara, you mentioned at the start our greenwashing course that's coming up, and certainly that we'll unpack that a whole lot more there. But there are challenges and solutions in that space.
And I think that point about actually talking about what you do and not fall into the trap of there is risk. The greenwashing, so I better don't say anything. Well, that's green hushing, and that's just dangerous, because if you're a leader, that what is that for a signal to everyone else if you don't talk about what you do?
And if you're not saying anything, your competitors will actually jump in and fill that vacuum. And what they fill the vacuum with will not be flattering.
No. So there is that. Dear audience, do you have any specific topics that you'd like us to address? Just drop them in the chat or in the Q&A box.
While we wait, just on that kind of communication point, I think, being clear about what it is you're doing and not using kind of generic statements is always something that we'd kind of recommend. I think there's a tendency to sort of make, well, at least it seems to be a tendency from my perspective, from marketing teams to want to make big, bold sort of generic claims. We are sustainable. We're more sustainable than this, or whatever, and it's sort of, Nicole's reaction kind of sums it up from our perspective. We always need to, our advice would always be as specific as possible. We've reduced our carbon footprint of this particular product by 30% compared to last year's version, or whatever it is. We've reduced water usage by this. We've enhanced our supply chain auditing with regard to modern slavery. We've done whatever it is, rather than saying we're more sustainable, we are the most sustainable, we're better than everybody else. If we can just be specific in how we communicate, we are doing this, we are doing this other thing, and there's probably some things we're not doing yet. And that's that honesty point that Nicole mentioned. It's not trying to claim that you've solved the world's problems or achieved world peace. It's more, what are the specific things you are doing? Why is that important? And choosing the right messages that are going to hopefully resonate with whoever your stakeholders are and what they care about, so that you can focus in on those things that matter and not kind of overclaim, right? You're still talking about it, but you're not trying to make big, bold claims that are kind of all-encompassing and ultimately not true as a result.
On that topic that you've just mentioned, or the comment that talk to your stakeholders and identify what really is important. Even if you don't do a GRI or an integrated or follow any of the frameworks for your report, have at least a little bit of reasoning on why are these the topics that you have chosen to measure and cover in your report. Because otherwise, if you don't have any stakeholder engagement mentioned in your report, it'll be, oh, they're talking about this because they do something. They're not talking about this because they don't do anything. If you consult with your stakeholders, it does not have to be a full-blown materiality assessment, but just really have that dialogue and go, well, what is important for you? And then have that reference. That gives you so much more credibility. And it can be really simple. I see a question here from Simon. Simon, good to see you. Do you think that recent growth in disclosures and reporting is taking valuable resources away from action? How should a company decide between spending between those two elements? Well, I would say take the pragmatic approach. When you focus on the action, document what you're doing, and that can be your reporting. If you don't have to follow a compliance regime, then do and report on what you do. Also report on what you don't do, but that really defines what your reporting is. I think the framework, even GRI and all the frameworks, are really helpful in identifying what could I be doing? How could I frame my report? If there is no specific requirements from your investors or clients to actually follow one of the frameworks, pick the most useful bits from those frameworks. I'm not saying pick and choose what is easy to do, but what actually delivers you a credible report. But come back to what Jeff said before, measure what is meaningful, and that needs to be determined by talking to your stakeholders.
I think just the ambition to report for some companies is helping them understand some things about their business that actually they didn't have a handle on before. And so, there's a spectrum of reporting. You don't have to do everything all at once, but even going, I think that we should be reporting our greenhouse gases at some level, quite often opens the doors to understanding and insight in terms of improving your business as well.
And I see we've had a couple of questions come through in the chat, so I might just raise one there. The first one was from Amanda. Have you had a lot of engagement and questions around TNFD? And I wonder who wanted to take that one. Barbara, did you want to have a go at that one, or?
I can. TNFD gets mentioned did get mentioned quite a bit when it first came out. What does get mentioned now, and that comes almost back to Simon's question, do you follow compliance reporting or do you do what is actually relevant? A lot of people do activities and report on what they're doing around nature. Do they follow TNFD to the T? No, they don't. It's really about the action. But nature has become a really increasingly important topic. And we do get asked about it a lot, especially with regard in the link to climate, because it really can be an adaptation measure as well.
And we had a comment come in from Audrey, which I'm just going to read out, and I think it's a good point. I think it's worth sharing, but I don't know if we need to respond to. So she's mentioned, I think that businesses do not really understand the opportunity and traction that lies in communicating the journey, including the mistakes and misunderstandings, and that sustainability is a journey with no answers in the back of the book. And I think that's a nice way of framing it.
Yeah, I'm having more and more conversations with not only clients, but NGOs and even government entities lately about how we do need to be sharing more, and not just, a case study on this great shiny thing that we've done, but actually get braver about sharing things that didn't work, because actually we're going to save someone else a lot of heartache, cost and time. And so maybe we actually need to look at how can we start building our information bank of what doesn't work, maybe we can anonymize stuff so it's not quite so embarrassing for people. But that idea of let's share what doesn't work as much as what does.
Yeah. And there's always that saying, right? You learn more from failure than you do from success, right? There's always more to learn from that. And so that sharing that failure, as hard as it is, as Nicole mentioned, it really does actually help take people forward so that they can sort of understand what mistakes to avoid, right? Helps take us forward faster in many ways.
Okay, so there is a bit of a discussion going on about I'll summarize in one sentence, about not many companies actually measuring carbon, and that there is not a clear link between cash going up and carbon going down. We see some evidence of that actually happening, and there was a response saying that how can you frame the internal improvements made that may only shift the needle a tiny bit? Well, there is that if everyone does shift the needle a little bit, it will shift more. Even if your science-based target requires you to reduce 30% by 2030, if you do 1%, 2% this year, you're already shaving some of that off. And if you break it down further into your organization, if everyone who contributes 1 or 2% actually does something, then that will add up. And I think it's really important to keep that in mind. A good example is always, do you go to in New Zealand, you voluntarily vote. We don't have to, as opposed to Australia. So do you put your one vote in? Does your one vote really count anything? Well, yes, we do go, because that one vote actually might count, and that is the same with the carbon emissions.
And just building on that, I think, when we do like corporate carbon accounting and, you're looking at scope 3 and you're looking at all the different categories, employee commuting is often not the most material of categories. In fact, it might even be below a materiality threshold, meaning that you could not even bother to include it, right? But we almost always include it anyway. And the reason is because it supports staff engagement, because the thing that the staff member can do is choose how they get to and from work. And so just because it's not the most material thing doesn't mean it's not important in terms of building engagement and understanding and helping people be aware of their own personal carbon footprint as well. And I guess it's the same sort of thing for a lot of things. Like we do a lot of product level life cycle assessment, that kind of thing. What we find generally is that the packaging is probably the least material part of the life cycle, but it's always included. And it's a really, really important thing for customers, because it's the piece of stuff that they have to actually choose to dispose of, right? Do I put it in this bin or that bin? Do I do this or that? And you have to make a choice. And so just because the packaging, you could say, from a life cycle perspective is irrelevant or very immaterial, it's still important, because the person that has to dispose of that packaging has to make a choice. And so just because it's not the most material thing doesn't mean it's not important, because it might help with engagement.
I think the other thing that we just need to own is that we actually do have responsibility around our suppliers' emissions. And it's hard, right? It's not nearly as easy as dealing with our own emissions, but we have a responsibility to understand what the emissions of our suppliers are, what their sustainability trajectory is looking like. How can we work with our suppliers? I'm not a big fan of just red flagging suppliers and booting them, but how can we work with them to improve what they do? How can we actually collaborate to improve things? Or, also having a panel of suppliers that then gives us more flexibility in our choices.
I'll just read out Audrey's comment, which I think will help with that. And that is: a revised community of sustainability practice, sharing knowledge and understanding, co-petition in practice, compete on research and education, and compete on points of difference. That beautifully really summarizes it. We're trying to facilitate a little bit of that with sharing here what we're thinking, inviting you to share your learnings. And we are a little bit over time, so I think we'll close it off here. If you have further comments, questions, thoughts, do get in touch. There is also an opportunity to catch up with Nicole and myself in person in Sydney at Transform in March. We'll be around either side of that as well. Also, at any other time, do reach out. Nicole mentioned our masterclass. I'll unashamedly do a little plug for that right now. You can still register for it if you do want to make sure your communication does not become a liability. There is also an opportunity to catch up with Nicole and myself in person in Sydney at Transform in March. We'll be around either side of that as well. Also, at any other time, do reach out. Nicole mentioned our masterclass. I'll unashamedly do a little plug for that right now. You can still register for it if you do want to make sure your communication does not become a liability. And in terms of being more pragmatic and enabling companies to do stuff themselves, we will be launching next week our disclosure kit, which helps to all those group 2 companies in Australia to really do their own climate risk reporting. More on that to come. With that, thank you so much, my panelists, Nicole and Jeff. Thank you for an engaged audience. We really do like it if your questions come in. And looking forward to seeing you next time. Have a wonderful afternoon.
Bye.
Bye, everyone.
We have many more webinar replays on a whole host of sustainability topics. You can check them out on our website and our YouTube channel.